So what is liquidity and where is it? So liquidity equals stop losses, and stop losses equals money, and then starts repeating itself. So it's just a cycle, right? There's only two forms of liquidity. There is liquidity above or below previous highs and lows, and there's liquidity above or below equal highs and equal lows, right? So equal highs are just highs that hasn't broken each other, right? So these are equal highs, these are equal lows, and there is now sell side liquidity down here and buy side liquidity. And remember, liquidity equals stop losses, meaning that in a bullish trend, right, there's a high here, higher low, higher high, higher low, meaning that liquidity equals stop loss. So there are retail traders and institutions that have gotten into buy positions right here with these stops below, right, anticipating the new higher high, and vice versa. There are retail traders that have gotten into sells right here with these stops above this high, anticipating new lower lows, right? So liquidity equals stop losses, and whenever there's stop losses, there's liquidity, because stop losses is money, right? Same in a bearish trend, right? It's a low, lower high, lower low, meaning there's stop losses up here, there's stop losses down here, there's stop losses here, 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 here. You get the idea, right? Whenever there's a swing high, swing low, there's stop losses equals liquidity, liquidity equals money. So what is a liquidity grab / liquidity sweep? So first of all, it's the exact same thing. It doesn't matter what you call it. I just call it liquidity grab. You can call it whatever you want. It's the same thing, okay? So in a bullish trend, whenever price is breaking out of this significant level, price will most likely start retracing to that level and start rejecting this level, okay? So this is where most retail traders get into buy positions with these stops below the previous low. Remember that as a key thing, and they're anticipating this new higher high up here. And remember, there's two forms of liquidity. There's liquidity above or below previous highs and lows, in this case right here, because there's stop losses down here. Stop loss equals liquidity, liquidity equals money. Price wants to hunt this money. Price wants to stop out all the early buyers right here and then move in that overall direction. So a liquidity grab is whenever price just sweeps this low, previous lows, and then starts moving in the overall direction, which in this case is bullish. So this is a liquidity grab right here. Liquidity combined with market structure, aka the power of three. So in trading, there's only three phases. You can either be in the continuation phase, consolidation phase, or liquidity phase. And after the liquidity phase, you get the continuation again. It starts repeating itself. So continuation, consolidation, liquidity, continuation, consolidation, liquidity. You get the idea, right? The continuation phase is mainly the push. So in a bullish trend, it's the bullish push, vice versa in a bearish trend, right? Consolidation, however, is whenever price is starting to move sideways and it's trapping early buyers and early sellers, right? Remember, there are buyers that have gotten into buy positions right here, stops below the previous wick, meaning there's liquidity down here. And the liquidity phase is whenever price traps and hunts that liquidity. It is whenever they stop out early traders, early buyers, early sellers, and liquidate them, stop hunt them, manipulate them, whatever you want to call it, right? And then after the liquidity, we get the continuation phase again. We get that massive push right here. So your job when trading liquidity grabs isn't to be in early. It is to wait for all the retail traders to get liquidated right here with a liquidity grab, right here with a liquidity grab. Whenever their stops got hit, you enter, right? That's the basic foundation of trading liquidity grabs. Okay, so right here, I've got a live trading example, and look at this. This is the continuation right here. Price is moving down in a bearish trend. Then price starts to consolidate right here, trapping early buyers and early sellers. Remember, there's sellers that have gotten into positions right here, stops above the previous high, indicating there's now liquidity up there, because liquidity equals stop loss equals money, and they're anticipating this move. Well, what happened at market opens? Well, price is obviously, obviously gonna push price up and liquidate all of them, meaning that this is now a liquidity grab, and once it starts flipping bearish, we can continue down for the continuation again post liquidity grab. It's so easy. Continuation, consolidation, liquidity, continuation after the liquidity phase, right? Let's play price right here. So I've got my sell stops right here. All the retail traders have gotten liquidated now. They've gotten stop hunted, manipulated, and I'm anticipating the move post liquidity grab, right? That's how you want to trade liquidity grab. You want to get in when everyone has gotten out, right? So I'll just take advantage of the entire move down, make about $1,000 in under 40 seconds. It's quite crazy. And obviously it's on a live account. I've proved withdrawals, bank statements. I trade live every single day as well, blah, blah, blah. The last thing I want to cover is my entire 16-page official playbook. 16 pages of this entire strategy, this entire liquidity grab strategy that has made me over $100,000. And I'm sharing it to you completely for free. You can just download this if you want to. It's in my Discord. If you want mentorship by me, you can always DM me on Instagram. Look at the link in the description. If you want to trade with me, link in the description. Discord.